Perseverance, a lowly virtue whereby mediocrity achieves an inglorious success. Ambrose Bierce. Isn't that beautiful? A lowly virtue whereby mediocrity achieves an inglorious success. Perseverance. That's what we talk about on a daily basis, 10 to 15 minutes a day. Not a lot of time, my friends, but you would be surprised to see how few people actually stick with anything, and particularly this, when the goal, the results, the possibilities of learning how to chart stocks and ETFs, the unlimited wealth that you could achieve if you mastered this art. And it's trend following. It's not super complicated, but it does take skill. And you learn that skill every single day because you got to be in the markets every day to understand the nuances. Otherwise, you don't get it. You think that just because you hear about a scare of some kind of worldwide pandemic, it's going to crash the markets. You think certain things are going to happen in elections and they're going to make the markets do certain things. No, we follow the charts. We don't follow the news. If it was about following the news, that would be no problem. That would be easy. It's not that. The markets react, counter-react to a myriad of different things. We don't follow the news. We follow the charts. It's all about the charts. And let's jump into those charts right now. We see that stocks are up again for the day. Q's is slowing down quite a bit, up only 0.33%. We always start off on the weekly charts. We see the S&P 500 up decently, 1.15. Whoa, 20-year bonds down again, and gold up a little bit. Now, let's jump first into the S&P 500. Of course, it looked like we were going to have a crossover, didn't it? We started the week off thinking, hey, or ended the prior week thinking, hey, we might have a crossover this week, and then all of a sudden, boom. But look at where we are. We had that big down move over the course of the week, and now we're about where that was. What's going to happen? Is this going to peter out or keep going? Don't know. I do see the derivative oscillator continuing to oscillate down. Hadn't gone negative yet, but is not far from it. And the price percent oscillator, it's not booming away from the red signal line. It is moving away slightly, so we'll continue to watch, see what there is to see there. Look at the 2-day chart. Still hasn't crossed over, going up. That 2-day chart representing Friday and Monday was a big down candle. It started retracting on Monday. And then the Tuesday and Wednesday green up candle is strong above the weekly, pushing through that 2-day trend line, but hasn't crossed over. The all-important price percent oscillator hasn't crossed over. Derivative oscillator still gaining downward momentum. Again, pay attention to that. Important to watch. Go to the 4-hour chart. Of course, it crossed over going up in the afternoon on Tuesday on its price percent oscillator. And it's the smallest of the charts that we look at. So again, it's the one we give the least amount of persuasion to. So again, we do watch it. We do pay attention to it because, of course, every big change in the chart starts with a small wave. But the 4-hour chart is our smallest wave. Then, of course, the intermediate's the 2-day. And then, of course, the big daddy is the weekly. And the big daddy is still up. So we'll continue to watch and see what there is to see and just how long this up move will go on. Don't know. Not super strong as far as our Heiken Ashi candlesticks go, our average pace. So pay attention to those things. And when we do have something set up that gives us an idea as to a trend, whether it is a recross on the 2-day chart, whether it is a crossover going down, or, well, we're up right now, but crossover going down on the weekly chart, we'll be ready to react. Let's go to the Qs, the NASDAQ 100. It's a nice green up candle. Price percent oscillator pulling away. Derivative oscillator still losing downward momentum, but the candle does look stronger here. Price well above that weekly trend line. We go to the 2-day, And again, trying to cross over. Did it end the day crossing over? Hard to tell. Very hard to tell. How many of you were looking to do a practice trade with that cross or that potential cross or that close to a cross? Let me know how that goes for you. Derivative oscillator still negative. Remember, we like to see crossovers where the derivative oscillator and the price percent oscillator both cross over on that 2-day chart for a recross in the same direction as the weekly. So we'll continue to monitor, see what there is to see there. How did the 4-hour chart shape up? Well, it crossed over going up back on Tuesday morning, up in the morning and then weakening in the afternoon. So again, continue to watch, see how these stock charts sort themselves out as we continue to move along. Now, we leave stocks, we go to bonds. Bonds, we had that weekly vertical crossover going up, and look what happened. It's just died to this point. Now, it's not a red down candle yet. It means a slowdown in that up movement. We see that the price percent oscillator is just about flat, maybe moving up just tiny a little bit. Derivative oscillator gaining upward momentum. But again, we reached a high of 145.76. Prior week, the high was 145.99. So we've not reached a higher high, close to it, but not reached a higher high this week. So we'll watch. Now again, we still have 2 full days of stock movement, Thursday and Friday, before we call our weekly chart, before we call the weekly candle. Look at this 2-day chart. Again, beautiful stair steps for 4 weeks and then falling off, dropping below that 2-day trend line. Hasn't crossed over going down. In fact, it's a long way to go for that price percent oscillator and the derivative oscillator to go negative. So we'll continue to keep an eye on things, see how this shapes up. We go to the 4-hour chart. 4-hour chart crossed over going down on Tuesday morning and, of course, has been strong down the last 2 days and just keeps moving down. Derivative oscillator, price percent oscillator. So that's where we are on bonds. We'll just keep our powder dry and see what happens, how this shakes out. Gold. Look at gold. Gold crossed over on that weekly chart. Some of us got in early on the 3rd. The actual crossover going up on the 10th. And of course, we had sort of a slow week on the 17th, the week ending the 17th of January. Decent up movement the week ending the 24th. Even better week on the 31st with a high of 149.68. Beautiful. And then this week, so far, we have a doji, which again means indecision, tending down. Price percent oscillator has weakened significantly on that weekly chart. Derivative oscillator has too, still positive, but heading down on the price percent oscillator. Go to the 2-day chart. What do we see there? Trying to cross over going down. Hard to tell if it's actually crossed over. Looks like it's trying its best to, sitting right there on the weekly trend line after crossing through the 2-day. So again, gold has lost some of its luster. We'll continue to see how that shakes out as the week goes on. Looks like the derivative oscillator has actually gone negative. Again, so really, really close to a crossover going down. We'll see how that proceeds, if it does, on Thursday. When you look at what's going on the 4-hour chart, though, you can see that things bottomed out on Tuesday afternoon and then really a little up and sideways on Wednesday. So we'll just see. Price percent oscillator still heading down, derivative oscillator still gaining downward momentum. So these markets are in flux. Some weird stuff is happening. Yes, what's going on in China has had impacts on the market, but again, we don't look to the news to tell us what we do, my friends. We look to these charts. Sent out a whole bunch of books yesterday. If you don't have our first book, Charting Your Way to Wealth, you need a copy. We have one for you. We have an autograph copy ready to go out to you. All you got to do is follow the link in the show notes, and you can have one too. If you happen to live overseas, email us, cw@chartingwealth.com. We'll get a copy out to you. First, we'll get you a PayPal invoice. Pay that. We'll ship your book to you wherever you are in the world. If you're not a Patreon supporter, Please support us, and thank you to the new people that have joined as Patreon supporters this week. We'll be getting all of your Patreon membership goodies out to you here before the end of the week. And again, appreciate you so much. Don't forget that Patreon question and answer call-in will happen next Wednesday at 12:30 Eastern Standard Time. Put that on your calendar, Patreon members. If you want to be involved in that call and earn a Patreon supporter, we got 3 levels starting at $30 a month. We'd love to have you supporting us. That's just some more in-depth training, taking your questions, providing the best answers that we can, again, for all of the practice trading that we do here at the channel. We're not a stock calling service. We're an education firm. We appreciate you being with us. We love to hear from you. Hey, you want to help us out if you're watching us on YouTube? Click that subscribe button in the lower right-hand corner of your screen. And of course, don't forget to sign up for our daily market reviews for free at our website, chartingwealth.com. God bless. All the best from the whole team at Charting Wealth World Headquarters.